We're going to start with FedEx, and technically these are earnings. Although fourth quarter profits for FedEx came in lower than expected, their revenue was also down, and they cut full year guidance. And they didn't really hold back in terms of all of the challenges that FedEx is facing as a company. And if you look at FedEx as a bellwether business, then there is cause for concern because shares of FedEx are down 13%. This is the worst day in over a decade.
Yeah, and FedEx is one of those businesses that tends to actually respond pretty significantly to changes in the macro environment. So, when they had this poor report, to put it nicely, there were a lot of things that they pointed to as contributing. One of those being the trade war, right, and a softening macro environment. Another one being the recently severed ties with Amazon, which earlier this year canceled their contract with FedEx for both ground and air shipping to do their own initiatives into, speedier delivery. But what I thought was really interesting is, FedEx for a while has been a questionable investment just because they're spending so much money to invest their infrastructure. Clearly, there's some softening in their B2B business, their business to business area, which is their higher margin business line. And then in addition with the issues with Amazon, what I thought was interesting is going back, they actually downplayed a lot of these things, I think, in previous calls, which is why this earnings report in particular was so big for them. You'll see a lot of analysts, Wall Street analysts as well, were actually kind of defending their positions. They were taken aback by it, saying, wow, they really misled us with how bad this could be moving forward. At the time, they said Amazon only made up about 1.3% of revenue. And this earnings call, you'll see they're kind of, using that Amazon as a scapegoat for part of their poor performance.
Yeah, it's interesting because Fred Smith and his team have been there a long time, and this is a tough business to run. And I think in general, Fred Smith and his team have run it well. But you're right, absolutely, about this quarter and the reaction in the investing community, because there was a little bit of that, like, wait a minute. We knew it
was bad, just not that bad.
Right. This isn't what you've been saying in the past about Amazon. Also, and this is, this got a little bit of play. This is not, I don't think this is as significant as what you mentioned in terms of Amazon and sort of the trade war and the macroeconomic impact. But you go back to the acquisition of TNT Express and FedEx really trying to expand in Europe. And now with the benefit of a few years hindsight, you can look at that and say, you know what? That didn't go nearly as well as you wanted it to. And yes, there was a cyber attack, and, whether or not FedEx is to blame for that, even if you absolve them of blame in that situation, the case that they were making for acquiring TNT Express and the synergies that could be wrought out and how they could expand their gross margins, that just doesn't happen. It really hasn't happened the way they wanted it to. And I think we're seeing today sort of a coalescing of a lot of negative opinions of sort of well, wait a minute, that didn't work out the way you said it was going to. Now you're telling us something different about Amazon. And I think for the first time in a long time, there's genuine skepticism about FedEx as a business. Yeah,
I agree. And it's not to say that I think FedEx is going anywhere, because I look 5 years from now, and I do think FedEx is still going to be relevant and still going to exist as a business, but it does call into question the capital decision-making of management, especially now that they're spending so much money to do stuff like modernize their infrastructure, something that they arguably should have done in priority over acquisitions, right? So it does kind of, I think, lead to a lot of skepticism from investors. But when I think about FedEx, while I don't think it's going to be a particularly outstanding stock over the next few years, you can't deny that they're good at what they do. And this might be kind of peak FedEx hate, especially if we don't enter a recession, in the next, I'd say, 6 months.
Well, and also you think about the next few months going into the holidays. If FedEx has a blowout quarter in early 2020, then this is a distant memory. But just we'll close on the stock. As I mentioned, down 13%, worst day in over a decade. Are you interested at this lower price, or do you think, there are enough question marks, some of which FedEx has raised, that I'm not buying this value play option.
Yeah, I think they've lost a little bit of trust from me here. Their new earnings expectations are about 20% below what they were just before they reported. So this one report alone decreased 20%, which is still a significant year-over-year decline. So I'm still not excited by this business, but I also don't think it's the doomsday scenario that some people may feel like it is today.